Hi, everybody. Welcome to M Talks. This is Bibin Michael.
This is Nikhil Mani.
How are you, Nikhil?
Good, bro. How's it going?
Doing great.
Um,
Been busy. I don't know, how fast the January went off. Like crazy. It's already February.
how fast? Yeah. But what's the excuse though? Why didn't we upload an episode 1 week?
One episode, right? So we missed 1 week. The excuse is actually we were out of country. We were in Canada for some time for a business expansion. And I was not able to record properly. We tried to do an episode from the car. Well, we were driving, by the way. So we were trying to do one from the car, but the sound quality was not great. So couldn't upload it.
Yeah, that's the long and short of it. But yeah, man.
How was
so-
Canada?
Canada was pretty good. Got to meet pretty good people over there. Young
Entrepreneurs.
minds that have diverse backgrounds. Let's see.
And the food was great.
Oh, listen. Food.
No
we
comments. The food was great.
Food was amazing. Shout out to those restaurants. I think one of the restaurants,
When I remember,
Mint Leaf in London, Ontario.
Mint Leaf in London, Ontario.
And then the other one that we had a really good experience at was Punjabi by Nature in Oakville.
Punjabi by Nature is amazing.
It was really good. Thanks to our hosts,
Vimal, Matthew,
and Benny Uncle's
Benny
cousin, Sally, Chechi, and
teacher, and Jijo, and Vimal. That was an amazing trip.
yeah,
And very productive, by the way.
very productive.
Very productive trip. And we are expanding to Canada. And if you're listening to us from Canada, reach out to us. That's a huge opportunity from the biggest industry. And we are expanding crazy rapidly. And if you want to learn about it, reach out to us.
So, and one of the things I wanted to discuss today, though, was life insurance. And what is the difference between life insurance policies and why do they have different types and stuff like that? Can you give me the reason what's the difference between a whole life insurance and IUL?
So to answer your question, Nikhil, so we'll go back to a little bit history on the life insurance. It started like a term life insurance, like if you can get a insurance life it can insure like a certain years, like 10 years or 15, 20. I believe it's 35 is the max you can purchase at a time.
Mm-hmm.
So that is so you pay some certain amount and your life will be protected. Anything happen, it's called face amount, or it's also called death benefit. So if death happens, the money will go to the beneficiary or the family. So basically, if I'm the breadwinner and something happened to me, my family need to be at least financially need to be protected. That is the whole idea behind it. And eventually, it's actually certain years, then it's over. So it comes out as a term insurance. Then eventually, it's revolving, it's upgrading in the industry itself. So there's something came up like the permanent insurance. So when the permanent insurance came, there's a lot of divisions under there. But how it started was all life insurance. A majority of the people very familiar with that insurance. Unfortunately, all those people still stuck with that insurance. The reason that they never upgraded. So all life insurance is actually works like how it works. Like we put money in the name of premium, and we take money out from the insurance in the name of a loan. This is the two forms you will be able to put in money and out money.
Withdraw money while you're living.
In and out will be on that name. So when you get a all life insurance, you will be paying a premium. The premium, how it works is actually, I'll give you a small idea on the air. So you pay a premium. The premium, a portion of the premium goes for the insurance. So you get an insurance. From the premium, there's a small amount. It's actually going into another account called kind of like a savings account.
Mm-hmm.
So this is the two things you will get from the premium you pay. And the money going from the premium for the life insurance, it's actually called cost of insurance. The remaining comes here as a savings account. So the money coming to a savings account is actually called dividend. So what that dividend means, All life insurance, there will be a certain, you're this age, this is your health, this is your amount, you pay forever, you have insurance. This is how it works. So the money what they collect is more than what they needed. The extra money they're collecting from us is actually they're giving us back as a dividend on a yearly basis. So that money comes to your account inside the insurance, and it will called as a dividend or cash value. And unfortunately, that cash value is not for you. We think we are using like that's your money, you will be using it. No, the cash value is actually, if you stop paying the insurance by age 65, you retired, are you going to continue paying $300, $400 for your life insurance? Maybe not. At that point, you stop paying for the premium. The premium is actually, or the cost of insurance, they are actually collecting or taking from the account, savings account inside your insurance. So that money, the dividend, they're collecting more money, giving to you back as a dividend. That will be saved inside your insurance as like a savings account, which called cash value. And if you stop paying to the insurance, the money or the premium or the cost of insurance, they are collecting from the savings account and paying, and you will have a lifelong insurance. This is how that works. And if you want to take the money out, that's your money, right? Even though that's not for you, but that's your money. If you want to take the money out, there's two ways you can take the money out. Either you cancel the policy, whatever the cash value, you can get it. Or you can take the money out as a loan. Remember I told you in the beginning, you're putting money inside as a premium, you're taking money outside as a loan. So you can take a loan. That loan is actually, they will charge you. They will charge you up to 5.5% until you pay back. So you take money out, you pay for the
interest only loan?
Interest only. Okay. And unfortunately, that interest won't work like a 401k loan. 401k loan, whatever you're paying, is actually adding to your account, right?
Right.
This 5.5% you're giving to the company.
Oh, okay. Got it.
So, which is basically not your money. End of the day, it's not for you.
So whole life insurance policy, let me just clarify one thing. Get some clarification. So let's say for a $500,000 policy, you're paying $1,000 a month, right? And so you're saying that out of the $1,000 a month you're giving, your premium is probably $750?
Yeah.
And $250 is going into your cash value.
Exactly. Okay. At the end of the year, they will give you as a dividend.
So, and that's growing based on what?
It's just
it's whatever they're investing the money into?
It's like works like a simple interest.
Oh, it's simple interest.
It works like you're just adding. Whatever you there, it's just adding there. That's all. It's not really a huge growth or anything.
So there's no much return on your money that you put that on that excess on the dividend?
Exactly.
Got it. Okay.
So before it was good. The reason because a lot of clients, everybody using all life, right? So the money what they collect as a premium, they're gonna use it for whatever the expense. How to run the company. This is like that you own the share. You right, like it, right? You're getting back, right? So whatever amount they collect, basically they will be using for running the company. Maybe a couple people will be debt might be happening, and they will be paying out the expense. Their death benefit and all. The remaining or the balance amount, whatever they collected, that is actually they're giving back to the policy owner.
Got it.
So now the picture is different. The reason the people not like before, not everybody in the one insurance, because that insurance industry is upgrading like crazy.
Right.
So people are moving out. They were looking for better
changing products,
the better features for them. So when the prices are coming, the number of people account holders is coming down, the collection of premium will be less, then the dividend also less. One thing wanted to emphasize here, that dividend is not guaranteed. If there is any excess money, they will give you back as a dividend.
That's it.
It's not guaranteed.
Okay.
So that's how it works. And now you can really pay attention on the MetLife. I don't know how many people listening to this holding a MetLife insurance. The MetLife is not in business anymore. They're not in the life insurance anymore. They're only in health insurance now. They close out their entire life insurance sector.
You mean they sold it out, I thought.
Correct. So when they sold it out, this is how this industry works, right? Mass Mutual and Bright House, that's the two company took over it. So the clients, nothing happened to the clients. I don't want to give you any panic attacks out there. Nothing.
Your policy is still valid.
Still valid. Exactly.
Don't be afraid that something happened to your policy.
No, I just want to give you on the company perspective, right?
They were not making enough money, so they decided to sell off that part of their business.
Exactly. But there's a lot of large company, world's top insurance companies, New York Life, they're still in the business, like running like crazy. So it's not like a running out of business or anything. It's a huge, still a lot of people holding it.
Yeah.
But depends on the client need. I have certain needs, and I'll be looking for what product will be suitable for me. I'm not looking for, okay, this is the oldest insurance, let me get that insurance. No, that's not how the market right now is. So by saying that, you can simply imagine how the telecom industry is actually came up, right? The cell phones. If you're using a same Nokia, do you remember that 3310, the blue one?
Yeah.
That was the top cell phone at that point, right? And if you use the cell phone, what's your benefits? You can call, you can text people,
you can play
but just imagine,
snakes.
And exactly, you can play snakes. And imagine you wanted to take a picture. You need to have a camera with you. Just imagine you wanted to send an email. You need to be in front of a computer. So everything you need to have like extra. But think about an iPhone or a smartphone with you right now. You can replace so many things, calculator, camera, or you name it. So a lot of things you will be able to replace. The same way, insurance industry also revolved like that. So it was initially like a whole life insurance and term life insurance. Then add-on features happened. So what happened to the add-on feature? The insurance industry is like very adaptive. So they looking for how best we can serve, or what changes we can bring, or how better we can serve the clients, right? So remember, there was a longer period of the time, like a bull market. When that happened, they realized, okay, why you want to keep the money in the savings account? Why don't you grow the money? So they started like a universal life. And it's comes under universal life. There's something called VUL, variable universal life. That simply means the savings account what you had, you can bring into the market and you can grow money. When the bull market was for a long time, it was great. People grow their money properly, was good. But what happened, the challenge what they faced was when the bear market came into picture.
In 2008 happened.
Exactly. So all the money came down. And when the cash value go down, and if that money vanished, your policy can easily lapse. So a lot of people lost their life insurance because the money on the market went down.
Well, that's also because people were not educating them properly.
Exactly.
A lot of people, I think, back in the day that were in the business would be telling their clients, oh, like you just have to put money for 15 years, 20 years, then you're done. You're done. Then the policy will last you till you die. But
there are products like that also in whole life. There are products also like that.
But at the end of the day, the way it's set up is that's eating into your cash value.
Exactly.
There's no free lunch.
No free lunch.
Like, so what people realized late was that they were getting notices saying that your insurance is close to being lapsed, especially like now, like all the older uncles and aunties in our communities that have taken these insurance policies. They got notifications saying that they were behind payments or behind the stuff, because what happened was after 2008, the growth of money was there. It still happened, but it wasn't enough to cover the premiums, the cost of insurance. And so I know one or two stories of uncles that like cursed out other insurance agents because they were like, you guys told me one thing, but that's not what happened.
That's a normal store experience out there.
Yeah.
I don't know, maybe I'm not saying the agency is not educating or anything, but the problem with this actually, the entirely different industry, right? Financial industry, the terms what we hear, terms what we're talking about is entirely different. The moment you educating them, they might understood. But after some time, it's not our daily practice. Yeah. It's automatically washed out. And after some time, when you pay attention, your money might be down, or you may need to pay extra money.
Yeah.
That's the time they're thinking like, oh, this guy was cheating. The guy didn't give me enough information. The whole point of this is actually, if you want to get any product, or if you want to get set up anything in financial product, right? Make sure you get the knowledge, understand the concept at least, and try to figure out this is for you or not. There's a million products out there. I don't know which one will be suitable for you. So if you can get at least a basic, a concept how this works, is going to be helping me down the line. If you don't get that picture, don't believe anybody blindly. Just go. No, don't when you go to a work, somebody will be there to help you. 6% employer do, just put all your money in the 401k. And when we talk about, or when you talk to people, retirement fund, the first answer is 401k. Why is like that? The blindly people are going. I mean, I'm not saying 401k is not good, but it's good.
401k is good up to a certain level. It has, where it is good is for people that can have the tax benefit of putting money into it and changing their tax brackets. Definitely maximize whatever you're putting in your 401k to get the max free money from your employer. Exactly. For sure. And then maximize your 401k on top of that. Max out your 401k per year based on your tax bracket if it's changing. If it's not going to change much, then look at what is the most beneficial for you with regards to, have a 401k to have savings, right? For sure, for 30 years. But then there's other products that you can put money into after you pay your taxes on it, which can grow tax-free. And so
end of the day, Nikhil.
Yeah.
It's your money. It's your decision how to grow. If your money is growing, it's good. So you may see this much percentage growing, that much percentage growing. Just disregard all those things. End of the day, is your money growing or not? Your bank is going up or not? That's what matters.
Mm-hmm.
So anybody can help you. How from anywhere you can get the knowledge. It's all depends on you.
Right.
But end of the day, your money must grow. If your money is not growing, no way.
Right.
The future will be in crazy hustle. So that's one thing. And so the insurance, absolutely get to know concepts and find out this product is worth it, or this is for you or not. If it's for you, absolutely do it. So don't, like I used to, it's like a stigma. Like I also had the, back home in India, right? We used to deal with the LIC. So Life Insurance Corporation of India. So LIC agents, a lot of agents around us. Mm-hmm. So we were trying to how to escape from them, run away from them. That's the whole idea. Why it like that? Because now I'm in the industry, also part of insurance, also part of the industry, right? So when I came here, I was thinking like why we were running around away from them, like why we were. One thing I noticed, like a death involved in the product. We don't like to talk about death, right? And there's something called death benefit comes into picture. So maybe that's one reason people don't like it. And the second reason might be, I don't know, some agents irritate people a lot to sell, do the sales. Maybe that's other reason.
I mean, there's definitely a bad definitely a bad name in especially in our communities, like with certain people. But it is what it is. But at the end of the day, though, I just want, like, going back to the subject of whole life insurance, like, so whole life insurance policies are just, it doesn't have the growth component in it is not what we think it is.
No, you can get life insurance or whole life insurance if your purpose is just protection. Death benefit, is that what you're looking for? All life is one of the option. But when you look at the expense wise, which is a little bit pricey, don't take me wrong. I also have access to all life. I can also provide all life, but I'm just giving a better analysis, like how
it's not the best product out there for most people.
Absolutely not.
Does the whole life insurance have long-term care riders and critical?
Some of them, you can add a long-term care rider in it.
Okay.
But it's not all, but some of them. And it's also, if you see like a long-term care rider adding, make sure how much you get, what are the features you have on that rider, and how much you pay for the extra for the rider. Some other products you have like a free long-term care comes in with it. So It's you make sure you double check what you're getting. That is the only thing I can say right now. And yeah, so we are into term insurance, then we are into all life, then something else also coming up. So coming episode, yeah, we can definitely continue this conversation,
Yeah.
and we can give a full picture. Right.
All right, everybody. Yeah, listen to our next episode to find out about the other insurance like Universal and what's progressed from there. Talk to you soon.